Are you making wild predictions in your financial planning game? Are you trading stocks and making financial picks like you play fantasy football? Are you taking some or all of these four steps towards financial prudence? Do you hate my November mustache as much as my wife? Hi, and welcome back to another Money Not Math conversation. In today's conversation, we are discussing the difference between playing fantasy football and planning for your long-term financial future. So thank you again for your time and coming back for today's conversation. As always, I genuinely do appreciate your time, and I really hope to bring you value because that's the whole goal of these Money Not Math conversations, is to provide value to you and those that you know, and hopefully help you increase the chances of reaching your financial success and financial goals. So in today's conversation, we're using the article from dimensional.com to help us with this conversation titled Make Wild Predictions of Fantasy Football, Not With Your Money, written by Dave Butler, co-chief executive officer of Dimensional. And this was written on November 2nd, 2022. And the article says, it's Sunday morning and my kids are checking player reports to evaluate their fantasy football lineups. They chatter about wins and losses from the previous week and rumors about a reserve player that looks ripe for a breakout. During the NFL games, they check their phones for player stats to determine how their teams are performing. It's fun to watch them test their player picking skills on NFL Sunday, and throughout the afternoon, they experience a full range of emotions. In many ways, the highs and lows of their fantasy football reminds me of how many people approach investing. The global fantasy sports market has exploded in recent years. One reason is that the younger population is growing and has ready access to digital infrastructure, affordable smartphones, and fantasy sports apps. Could a similar trend be driving younger investors to speculate in the financial markets? And when he uses the word speculate, he's referring to guessing or trying to be smarter than the market itself. So it's kind of like picking stocks or trying to time the market is how many people refer to as speculate in the financial markets. So back to the article. Today, stock trading programs sit alongside fantasy sports apps in our smartphones, offering easy access to stock or cryptocurrency trading, and sometimes faster than it would take to pick up a new tight end or place a bet on a Sunday morning. But with your investment portfolio, the fantasy can only go so far and stakes can be much higher. And I can attest to this. I have a Robinhood account myself. I would not recommend it for your long-term planning, but I like to use it for my fun money and play around a little bit. So, but it's amazing how I can literally make a trade in the market on my app just as fast, if not faster, than I can go pick up another quarterback. Because at least picking up a quarterback in my fantasy league often has a waiver period that makes me at least think about whether or not I'll make the decision. So can remove emotion a little bit there, but it is truly amazing how access to more information and access to higher technology can actually return worse results for the investor due to the quickness of the decision rather than maybe the logic or long-term approach to the planning. So back to the article, this may be a good time to think about the difference between speculating and long-term investing, and recognize that your investment decisions have real and lasting consequences. Building a stable investment foundation is key to helping minimize bad outcomes and positioning for the potential rewards in capital markets. 4 steps towards financial prudence. Here are 4 ways to help ensure you're making prudent financial decisions. 1, understand the impact of your decisions. It may be easy to get caught up in using convenient digital platforms to pick stocks or time markets, but without a solid investment philosophy, everyone runs a greater risk of getting caught up in the emotional roller coaster of speculation. Convenience and instant gratification are poor substitutes for strategic, long-term investment approach guided by proven market principles and decades of research into asset behavior and portfolio design. 2, think long-term. The NFL fantasy football season lasts just a few months. That's not the same as taking a lifetime view of accumulating and managing wealth. Your investment decision should be based on a time horizon that matches your goals. Speculating on individual stocks or industry sectors encourages a short-term mindset that can be easily jarred by unpleasant surprises. Investing involves a longer-term perspective that rests upon historical understanding of markets. 3, know your investments. Digital platforms can give access to an ever-expanding range of alternative investments, from cryptocurrency to single stock exchange traded funds to pursue good outcomes. It's critical to understand the characteristics of stocks, bonds, real estate, and other asset groups, and their specific role in your portfolio. This means evaluating an investment's expected returns, range of risks, and potential costs. Number 4, seek out a qualified financial advisor. One way to create and manage an investment plan is to enlist a professional. Working with a financial advisor can help outline clear financial goals and make investments that are contributing to those goals. Instead of simply gambling on the market, an advisor can also help you focus on controllable factors such as diversification, portfolio rebalancing, and tax management. Daily market moves are beyond anyone's control, but you can choose how to react in a tough market, like we're kind of in right now. Investing is not a game, and it shouldn't be treated like one. So sit back and enjoy the rest of the NFL season. If that fantasy league makes it all more interesting, so much the better. Just understand where in life you can afford to lose and where you cannot. Financial security is built over years, even decades, not on any given Sunday. With a solid investment plan and discipline to match it, you can pursue long-term success without the anxiety and emotions that come with speculation. So I really want to highlight one of these last statements. Just understand where in life you can afford to lose and where you cannot. Financial security is built over years and even decades, not any given Sunday. This is extremely crucial when we consider how much the financial media and pundits and forecasters try to get us to emotionally react to short-term life events, even though we're building long-term plans. And the best thing we can do in many, or if not most cases, is completely ignore what the politics or the forecasters are saying about what's going on, depending on what the timeline is of the goals we're trying to achieve. So again, thank you for coming and joining me for this Money Not Math conversation. It's the 121st episode, so I genuinely appreciate all of you who take the time to listen or watch these conversations, and I appreciate you even more if you're willing to share, comment, like, or reach out to let me know your thoughts, your questions, and your requests for future Money Not Math conversations. Thanks, and have a great day, and good luck to hunters in the second weekend. Bye.